Thank you guys so much for tuning into today's live stream. It is June 13th, 2025, and to begin today's live stream, I do want to take a look at the economic calendar here. So, today we have preliminary consumer sentiment. We have preliminary consumer sentiment at 9 a.m. So, sorry about that. And yeah. And so to begin today's session, like I said, we have preliminary consumer sentiment and we have preliminary inflation expectations. This is something that I am curious about, the preliminary inflation expectations, right? Notice we haven't exactly had such high inflation expectations here in I don't know how long, right? Even during the 08 or I guess pre-08 financial crisis here, the inflation expectations were near 5%, right? Now it is up to 7.3%. That means that inflation that people believe it that we're in is even worse than what occurred during 08 and even during the COVID pandemic. Inflation expectations were just around 5% or so, and it's been the expectations here has just been going up. 7.3% expected inflation, and this may not be the actual number of inflation, this might not be the actual percentage of inflation, but expectations do have a tendency to affect human behavior, right? If we expect inflation to rise, then some of the behaviors that we will do is going to base off of that expectation, right? And let me get and ask GPT here. Inflation expectations. This is supposed to be average behavior. Inflation expectations are what people, businesses, and investors believe future inflation will be. They play a huge role in shaping economic behavior today, even before any actual inflation happens. So based on my money and banking class, if people expect inflation to rise, then interest rates are going to rise here as well, because they want to demand a higher rate of return in order to combat that inflation rate, right? The purchasing power of their dollar that they have in savings account, money market funds, or whatever, it isn't going to give them that high of a return, and so they're going to want higher interest rates. Why inflation expectations matter. Inflation expectations affect consumer spending, business pricing, wage negotiations. People are going to demand higher wages. Here, investment and interest rate decisions, central bank policy. Interest rate decisions, right? I'm assuming they would want higher rates. If people expect higher inflation, then they might buy now before things get more busy or get more expensive. Wages will lag behind. They're going to ask for higher pay. Savings lose value, right? And so, like I said, because inflation eats into their purchasing power of the savings, they're going to either spend the money because they know that in the future prices are going to be higher and higher for the products and services that they want to buy. And oh, this is interesting. So they're going to rather invest than save. So investing is a higher rate of return, but you have to, I guess you're going to have to take in more risk. Let's see, take out more loans today. Borrowing becomes cheaper in real terms. Yeah. And firms expect higher input costs. This can actually cause inflation to rise, even if it wasn't already, because behavior adjusts in advance. This is known as a self-fulfilling prophecy. So this is the word that I was trying to look for, right? The expectations will end up leading to inflation if we behave in a way that there is inflation. And so it's a self-fulfilling prophecy. Central banks like the Fed, inflation expectations are key to interest rate policy. If expectations have been unanchored, people no longer believe the Fed can control inflation. The Fed may have to raise rates aggressively, even at the risk of a recession. Yeah, this, like I said, higher inflation is going to tend to lead to a increase in rates. All right, so to begin, I guess that's pretty much all for the for the fundamentals, right? Like I said, preliminary consumer sentiment, and we have preliminary inflations at 9 a.m. But that is just the fundamentals. The technicals here, diving into it, it appears to me that we have, we had created this pretty much doji candle yesterday, right? With the way that we closed here on the daily time frame, I didn't have a bias of either higher prices or lower prices. I can't really make that assumption, right? I can't tell if we're going to take out the previous day high or previous day low. The closure is closer, like the candle's close here is relatively closer to the daily high than the daily low. It's just that we didn't necessarily have any fair value gaps to support the idea of higher prices, and so this made the assumption for higher prices for us to take out the daily high really wasn't a part of my game plan. And so whenever we opened up during the Asian session, we had this really large displacement here. This displacement lower, and yeah, so coming into the London session, I was trying to see if we were going to get a retracement back into the discount of this dealing range, which is why I have this set up here, this risk to reward. I didn't take anything yet, keep in mind. I wanted to wait until all of these candles, the 4-hour candle, the 6-hour candle, the 8-hour candle, and the 10-hour candle closed, for me to really have a bias. And so with the way that we are trading now, it suggests to me that we might not be respecting the inefficiencies like I thought we were going to. And yeah, so for us to have continued lower to retrace back into the discount of the daily dealing range, we should have respected this this 4-hour fair value gap. I mean, we can continue to respect it actually, but for the time being, with the way that it looks like we're going to close here on the 4-hour time frame and the 8-hour time frame, it doesn't look like we are going to. It doesn't look like we're respecting it, right? And so, yeah, I think one main thing that I have to remind myself is that the reason why I didn't take this setup here is because I wanted to see how we would close here on all of these time frames. And the 10-hour time frame didn't close until it didn't close until 3 a.m. And it didn't close until 10 a.m. or 3 a.m. I'm sorry, and the 12-hour time frame as well. And the 12-hour time frame closed here at 5 a.m. And so I didn't really force anything because I wanted to wait until these time frames actually had their closure. And the 10-hour and the 12-hour, even though that it closed bearish, it isn't as suggestive of lower prices as like the 8-hour or the 6-hour. But yeah, so the daily time frame, the daily candle, the daily objective has been taken out. Even though I didn't have an objective, we did take out the daily low with the price, with the move lower here during the Asian session. And so with this move lower and us taking out the daily low, that means that I can't utilize the daily time frame anymore for some sort of bias, right? I wasn't even going to use it as a bias, but this really confirms it. The fact that we taken out daily low means that I can't use the daily objective. So my best bet coming into the morning here is to utilize the 8-hour time frame and the 4-hour time frame. And so depending on how those two candles close here for the morning, that will give me my morning objective. So if we were to close on the 4-hour candle right now and the 8-hour candle right now, then my best assumption would be that we are going to take out the 4-hour / the 8-hour high. That would be my best assumption to make, right? But we close in about 14 minutes or so, so I'm not really going to force an idea here just yet. But like I said, it does look like we are going to take out the 4-hour high with the 8-hour high with the pace that we're at right now. And yeah, so that's pretty much all that I have for, I guess, my technicals and my bias coming into the morning. One thing that I do want to mention that is today is the last trading day of the week. So that means that this weekly candle here, you really have to pay attention to the weekly power of 3 here. So with the way that we are closing right now, it looks pretty doji, right? I can't tell if we're going to take out the weekly high or the weekly low with the next weekly candle. However, we still have a decent amount of time left, so I'll allow prices to do its thing for the next 8 hours or so. But yeah, so just keep in mind that the weekly candle is going to close today, but we didn't really do much this week. We didn't really do a lot of expanding. we did a lot of consolidation, if I'm being completely honest. You know, coming into Monday, we pretty much like consolidated throughout this entire week. And then during the agent session on Friday, we did have this kind of like move lower here, but we are not respecting any of the fair value gaps right now. So yeah, that is something to keep in mind. I think for now I'll hop into a chess game, and once the 10 a.m. Central Time candle closes, which is the 4-hour candle and the 8-hour candle, I'll be right back to see what I want to do. Really not sure what he's trying to do here, but just go here. I was kind of anticipating that. Give him a check. Coolio. Now I'm going to chase out his knight. Attacking is not here. It's either to run back and I take it, but I wouldn't want to take this if he goes back here, because cool. Now I take this pawn. I don't think he has much of a way to defend it. And now he just lost his bishop. He's lost another bishop. I'll just continue to trade pieces. And nice, we are up here. This is good. This is a really good starting point for us. And I think I'm just gonna do this. So his knight's kind of messed up. I'm just gonna continue to trade here, to be honest. I think I want this actually, so just continue to trade pieces, just because the fact that I am continue to trade. Alright. Now I have my lineup. Awesome. I can give him a check here. I can do a lot of things. Check. Give him another check. Just go back here just for now. Give him a check here. Give him another check. If he goes this way, I'll just trade my rooks. And I'll go here just in out his rook. Doesn't really have much to go here. All my pieces are like interlocked. Everything looks pretty good. Cool, cool, cool. Awesome. Here, and I am chilling. I can honestly give him a check. Here. I gotta go a little bit faster right now. I can get this. Okay. Interesting. He goes there, it's fine. Awesome. And now he's lost. Wow, what a matchup. I think what was good was I capitalized on me being up one pawn, and then he lost that bishop. After the bishop, I just continued to trade pieces, knowing that I'm going to be, for the late game at least, I'll have more pieces than he does. Pretty simple approach, but yeah, worked out. 4 minutes, actually about 3 minutes actually, until the closure here. It's looking like we aren't really going, well actually the 4-hour candle is still going to close. It looks like it's going to still close bullish. So 4-hour candles closing pretty bullish. 8-hour candles closing pretty bullish. Bye bye. It's just, if you guys take a look here on the 15-minute time frame, you'll notice that 4 hours candles bullish. However, the 15-minute time frame doesn't really suggest that we are seeking lower prices. And yeah, so this right here is us being kind of out of alignment. And with the way that we are closing here on the 15-minute time frame, it looks like we are most likely going to take out that 15-minute low. Yeah, you guys can see here, so 15-minute candle suggesting that we are most likely going to take out that 15-minute low. Interesting. Very interesting. And yeah, so so I wouldn't want to use, coming into today, I probably am not going to utilize, or I guess this morning, I'm not going to utilize the 4-hour candle and the 8-hour candle. I'll probably utilize the 15-minute candle because of the way that it's closing. It's clear to me that we're going to take out the 15-minute low than the 4-hour high. It's like, with the way that we're closing here on the 15-minute time frame, objectively looking at it, it's more clear that it's more probable that we are going to take out the 15-minute low than take out the 4-hour high. And so I would utilize the 15-minute time frame here as some sort of like bias, right, for us to continue lower. And let's see, so I do want to see it I want to see how we close here on the 3-minute time frame. Like, we haven't had a chance to retrace back into the discount of this dealing range yet. And so let's see. Oh wow, look at that spike. So initially right at 10, we opened up and we immediately spiked up. And let's take a look at what consumer sentiment is. Consumer sentiment is actually went up. So it went from previously consumer sentiment was a 52.2, and now this month, or I guess previous month, it went up to 60.5 preliminary consumer sentiment. And inflation expectations actually went down. This is better. I like that we're not expecting inflation to be as high, but yeah, 6.6% to 5.1%. This isn't the Fed's target inflation rate. I think the federal inflation target rate is like around 2%. So I mean, we're still anticipating for higher prices, just not as high as a rate compared to previous month. And that's probably why we've had such a like shock up here. In that one move, it was actually kind of like volatile. So yeah, interesting indeed. Let's see, so 4-hour candle here, it closed bullish, right? You can make the assumption that we should take out the 4-hour high and the 8-hour high. It's just with the way that we closed here on the 15-minute time frame, I am not as I wouldn't be really inclined to see the fact that I want to see us take out the 15-minute low before possibly taking out the 4-hour high. that's something that I would like to see. I would like to see this setup happening. I would like to see this setup happen. It's just the reason why I didn't take this here is the way that where we closed was within the fair value gap. And we actually closed above it, which isn't ideal for higher or lower prices. But yeah, I didn't take the setup. It's just a possible setup, but didn't really play out. 15-minute time frame, what's occurring on there right now is that, to me, we should get a retracement back into the discount here. That's kind of what I would like to see here coming into the morning session right now, is I want to see us retrace back into the discount of this dealing range, of this 15-minute dealing range here, and maybe, who knows, I want to see us retrace back into the 15-minute dealing range's discount level and take out the 15-minute low. So us retracing back into the discount would be the higher time frame objective, and the way that you would align yourself with that is this 15-minute model, which suggests lower prices. But it's looking like we so ES suggests lower prices as well. The way that we closed here on the 3-minute time frame isn't exactly supporting lower prices yet, right? The 3-minute time frame here, the way that we closed, it means that we could have an opportunity to rebalance this inefficiency, which we just did. Because notice where the way that we closed here on this 3-minute candle is above this red line, and this red line is the 3-minute fair value gap candles, the second fair value gaps candles low. And with the way that we closed, because we closed above it, that means we could rebalance into this fair value gap. Once we get a candle closure below this red line, then I would treat this 3-minute fair value gap as a breakaway gap. But because we didn't close below the red line, then I would have to treat this fair value gap as a fair value gap that gets which we'll call it rebalance. It could get rebalanced. So yeah, I'm just watching pretty closely on where we close. So this is the last minute in the 3-minute candle here. And if we can close below the red line, then I'll consider taking a setup. If we can't, then I probably am not going to force anything. But I don't like the fact that we're just consolidating here. And so if I were to be in a setup here, I would only allow myself 6 minutes left for us to complete this objective. If we don't complete this 15-minute objective within the next 6 minutes, within the next 6 minutes, I'm not going to really do anything. We didn't close below that red line. Notice that the way that we closed on the 3-minute time frame, this is where we closed. And to make it a little bit simpler, the purple line is not below the red line, which means we could get a rebalance into this inefficiency. Just a possibility, and I don't want to play with the possibility of us rebalancing into it, because preferably I would like to see prices close within this range. I'll make that a blue box. So within this range is where I would take my setup. I would like to see a 3-minute candle close within this blue range. If we don't get a closure within that blue range, I just don't force anything. And if we do end up taking out the 15-minute low without me, that's completely fine. It looks like we're about to take out the 15-minute low. Who knows? There we go. So that's us taking out the 15-minute low and us retracing back into the discount of the 15-minute dealing range. So now we could take out the 4-hour high. It's just, for us to do so, we would have to respect the 15-minute fair value gap. But yeah, so everything there just went according to plan. It's just no setup, right? Like I said, I would have liked to see a candle closure, a 3-minute candle closure below the red line, preferably within the blue line or blue box. So below the red line and somewhere within that blue box is where I would have liked to see prices close, but we didn't necessarily have that, so that's completely fine. And yeah, so I think that's pretty much all that I have here for the morning session. Hopefully that gives you some insight on how I view prices. And yeah, so I think to end off today, I would go over some of the pros and cons here. And call it a day. So some of the pros and cons coming into the week, coming into this week, from the week of June 2nd to June 6th. The first one is always going to be being consistent. I think that's my number one value. That's my number one value in my approach here. And the way that I'm going to stay consistent is requiring a higher time frame objective, a model, and a entry pattern. A higher time frame objective is essentially like the bigger reason why prices should continue lower. And in this case, whenever we were watching it on the 1 minute time frame, like I pointed out, I wanted to see us retrace back into the 15-minute dealing range, the discount level, which we did. And yeah, that was essentially the higher time frame objective. That was like the bigger reason for why prices should continue lower. And my model, the way that I align myself with that is based off of the 15-minute time frame. So the 15-minute candle here, with the way that it closed, to me, we should take out the 15-minute low to expand lower towards the discount level of the dealing range, which was kind of what I was kind of going for. And yeah, in my entry pattern, it would have been that 1 minute fair value gap right here. But like I said, with the way that we didn't close below that red line, it didn't really give us a opportunity to do so. And yeah, so that's pretty much the three components that I always require before I even take anything, right? Second pro here is knowing what to pivot. Pivoting is if you, like for instance, coming into today, I couldn't use the daily time frame, right? The daily candle we have already taken out the previous daily candle's low. And so, on top of that, the way that we closed on the daily candle it didn't really suggest higher or lower. It was very uncertain. And so I pivoted onto the intraday time frames, onto the 4 hour, onto the 6 hour, onto the 8 hour, onto the 10 hour. But coming into the morning, I liked the idea of us continuing higher towards the 4 hour high, but I just preferred the 15-minute order flow a little bit more than the 4 hour. And like I said, the 15-minute order flow was for us to take out the 15-minute low and to continue to lower towards the discount of the 15-minute dealing range. That's kind of what pivoting is utilizing every single time frame and maximizing their utility. Every single time frame has an objective, right? Prices is fractal, so I'm going to use that to my advantage. And yeah, third, utilizing SMT here as well. If you did catch what I was doing with, watching ES and NQ, I was watching to see if we had taken out the ES low before taking out the NQ low. And so that's just me checking out for and just watching for SMT. If there was SMT and I was in trade, I would have moved my stops to break even, and that would prevent me from being manipulated out of the markets. Right? SMT is essentially like it shows you when there's been intervention. It shows you when there's been some sort of manipulation between the asset classes that you're comparing. And they have to be correlated assets. NQ and ES are correlated. But yeah, so that sums up pretty much all of the pros here. Consistency, utilizing different time frames, and utilizing SMT. Some things that I can continue to work on is making sure that my risk to reward is always going to be at least a 1-to-1. High stake gamblers, they could have a 33% win rate, but if their risk to reward management is efficient, then they're going to be profitable, right? And yeah, so typically the risk to reward that I kind of aim for is to at least have a 1-to-1, but most of the time it's going to be around like a 1.25, 1.5, 1.75, and if it's a extended run, it could end up reaching to like 2.25, somewhere around there. But yeah, ideally, at least a 1-to-1. Second thing to work on here is understanding that my maximum dollar stop loss is going to be $100 for any setups during intraday, and because it's not so volatile, not because prices we don't really move as much as we did like maybe a couple weeks and months ago, but yeah, every single setup that I do have that I'm going to take will be risking utmost $100 or so. And the daily margin requirements, so intraday daily margin requirements are about $100 per contract. So if you were taking a setup that had 5 contracts, then that means the margin requirement that you would have in your account is $500. You're required to have at least $500 in your balance for you to meet the margin requirements. And some of the fees are to open and close a contract. In total, it would cost you $1.12 or so. And yeah, pretty much that's the pros and cons. Some of the improvements here is to continue to take consistent trades, utilizing every single time frame to its utmost potential, and paying close attention to SMT. And last but not least, I have to follow my risk to reward rules and track the progress of my 100K journey. That's pretty much all. For me, I do want to record myself whenever I'm actually in a trade. I didn't record it, but I was actually live streaming during a trade, and I kind of like to watch and see how my emotions and how my thinking is during a trade, because whenever you see that P&L, your emotions and just human behavior is going to be an aspect, right? And so I want to be able to record myself whenever I am in a trade throughout this journey, to be able to see how I evolve emotionally wise, and how I handle myself whenever I am in, I guess, in those situations. Yeah, I think that's gonna wrap it up for today's. Actually, I think that's pretty much all that I have for today. What I would leave you guys with here is watch for how we close on the 6-hour candle during the afternoon session, right? Once this candle closes, what does that mean? You have a new objective. Utilize that to your advantage. Another thing is that if we do continue lower, the discount of the dealing range here would be something that I would watch really closely for, right? As that could be treated as a higher time frame objective. Yeah, so watch for the 6-hour candles closure. Watch for how we close here on the 10-hour time frame and the 4-hour time frame as well during 2 p.m. Eastern time. And if we do continue lower, watch for a retracement back into the discount of this dealing range. And with that, that's going to be all for today's live stream. I'll be back here next week as well, Monday, 8:30 Central Time. And until next time, be safe.